Hi, everyone. Welcome again to Thoughts from the Machine. I'm Bill Gebhardt, founder and executive director here at 10 Dynamics. Although this is supposed to be our March month review, we're going to also make it a little more exciting by including the first week of April, which I'm sure you know has seen some dramatic moves in global markets. So was this all a huge surprise, a black swan event out of nowhere? Well, here's a quote from last month's Thoughts from the Machine. As of our filming, the current decline in the S&P 500 is the largest sell-off since this bull market started in November of 2022. And our model sees this as a clear change in investor sentiment. VIX futures also entered an uptrend in the final days of February, confirming this change in psychology. Underlying those movements, the big tech market drivers like Nvidia, Tesla, and Google have simultaneously lost their uptrend ratings. Overall, our model indicates that this could be the beginning of a bigger downtrend coming in the next several months. So you might not have heard it here first, but you did hear it here. So let's see where things stand now. March saw some initial bearish follow-through in the S&P 500 and a rise in the VIX. As we've been harping on about over the last year, a bull trend in VIX is always the best canary in the coal mine warning for U.S. equities. And the VIX bull trend emerged within a few percentage points of the highs in the S&P. One of the most important companies in the S&P, Nvidia, entered a strong bearish trend on our model on March 5th and has fallen 25% since. Apple entered a strong bear trend at the same time and is likewise down nearly 40%. Trend following is often given a bad rap, with some people claiming it only looks at the past and that it doesn't make forecasts. Well, that's just wrong. Systematic strategies can and do make forecasts. They're a lot more than simply yesterday's news. Another important market we've discussed in nearly every podcast since this time last year is gold. Gold moved into a strong uptrend on our models at the beginning of last year and hasn't looked back, with a few consolidations along the way. Gold rallied all of March, but also registered a fairly strong reversal probability on March 31st, signaling at least a multi-week consolidation or possibly a trend reversal. But given the strength of the long-term parts of our model, it appears that this will be maybe a multi-month consolidation over the next few months rather than a change in trend. Most other metals, including copper and silver, have had a strong reaction to the tariff news. Our model, however, does not see these moves as a new bear trend. Metals still look constructive in the long term to us. Last month, we noted the change in the EU energy space from uptrends across most products to a quick move into an early downtrend, particularly in European gas. Most markets consolidated during the month, but in the last week, they've moved into strong downtrends all across the sector. This appears to be the beginning of a trend to lower energy prices in Europe. Okay, our chart of the month is VIX. Now that we've entered an uptrend, how high can it go? You can see from the chart that most market sell-offs within bull markets result in a VIX of 30 or so, and a VIX can reach 40 in more dramatic situations. Only the two major bear markets in the last 20 years took VIX levels all the way up to 75 plus. You can also see from the chart how fast the VIX collapses once the fear is over. And our model will be quick to switch to a downtrend if and when that happens, and to give the all-clear signal for U.S. equities. Let's have a look now at our trend strength model by sector. We've talked a lot about the interesting areas already, but maybe an important point that we haven't mentioned is almost everything is in a downtrend, with a few notable exceptions like the VIX obviously, but also some of the major currencies like the euro and the sterling are strong uptrends against the US dollar. Rates are also neutral to slightly bullish for US long-term bonds. Clearly, tariff wars are driving everything, but will these trends be sustainable? So far, we aren't seeing any reversal probabilities in any downtrends, with the exception of the VIX as we speak. Overall, our model thinks it's unlikely that these new trends will end in April. For more information about systematic and trend-following investing, head over to our LinkedIn, YouTube, and Spotify pages to make sure you're receiving all of our latest content and ideas. As always, if you're a professional investor and you'd like to receive our detailed monthly fact sheets, please contact us at inquiries@10dynamics.com. Thank you for listening, and see you next time with more Thoughts from the Machine.